Hi everyone, and dear management, dear participants, we'll start the meeting now. Good evening, everyone, and on behalf of EcoProjects Advisors, I, Ruchika Shah, warmly welcome you all to the virtual investor roadshow of Exato Technologies Limited. We truly appreciate your time and participation today. Exato Technologies is one of the most dynamic and fast growing AI driven digital transformation companies, empowering enterprises with next gen customer experience platforms, intelligent automation, and data led decisioning. With a strong foundation since 2016, Exato serves 150 plus global clients across BFSI, healthcare, retail, telecom, driving measurable impact, high quality execution, and a rapidly expanding recurring revenue engine. The company's momentum, innovation roadmap, and industry partnerships make it an exciting player in the tech landscape today. Let me quickly walk you through today's flow. We will begin with a presentation with the senior management of Exato. This will be followed by a question and answer sessions. Now I'm pleased to introduce the leadership team from Exato Technologies Limited joining us today. Mr. Apur Sinha, promoter, chairman, and managing director. Mr. Hassan and Mr. Santosh, finance team, and Ms. Geeta, compliance team. From the book running lead management, we have GYR advisors, Mrs. Neelam Gurbaksani and Ms. Mahek Sechwani. With that, I now invite Mr. Apurva to take
Good evening,
over.
everyone.
Thank you. With that, I now invite Mr. Apurva to take over and walk us through Exato's business overview and strategic outlook. Over to you, Mr. Apurva.
Thank you so much, Ruchika, for giving us this opportunity, and a warm welcome to everyone. Good afternoon. Would like to start with a short introduction about myself. With education background, computer science engineering, and did MBA, and having close to 22 years of experience in this customer experience domain. I founded this company in 2016. So would like you to take you through this journey. I have a presentation deck. Let me share that, and then let me talk about in detail about the company and its journey. I just wanted to check if my presentation is visible.
Not yet, sir.
Okay. So, like shared here, we started our journey around 9.5 years back. We founded this as an analytics company, and we have been serving 150 plus customers across 12 locations globally. We have 135 people. Out of this, 50% are on engineering side, services deployment, and as well as product development. We also have our subsidiaries, two international subsidiaries and one Indian subsidiary, primarily to expand our global footprint as well as another line of business. We have been serving across all the industry verticals, and since we play in a very strong customer experience and compliance domain for our customer, we manage their large amount of interaction data, help them with digital transformation. That's the reason you see we have a very strong customer retention also. So with that, we have been serving more than 1 lakh plus agents, basically customer service agents deployed across all these customers, 150 enterprise customers. And this journey we have been continuing since last 9.5 years. To give you a snapshot about our journey, like I said that we started as an analytics company in 2016, and in first year itself we were profitable and we crossed 10 CR mark. We closed at a revenue of 11 CR. Next couple of years were of hyper growth as well as of diversification, wherein we started adding more and more capability on services and analytics side. And we also started expanding in newer verticals. We ventured into BFSI. We also got some travel customers. We got majorly into ITITS BPO, wherein we have been serving all the named company you see, all the ET 500 company, top company we have been serving. And our customers has been our strength, and that is the reason you see we have been growing year on year. In 2021, we took another giant leap when we set up our own product division. And this in fact came from one of the use case wherein we were closing a 100 plus CR deal with a globally Nasdaq listed multi-billion organization, wherein we developed a product for them. And that is the time we understood that we should also have our own product offering, which over a period of time we have enhanced it. Now, since globally this is a 15 billion market, so we saw a clear need of establishing our international office. So we established our international office in US and Singapore, and subsequently in last 3 years we have been growing our business in this international geography also. So basically, three line of business we have segregated. The one line of business is customer experience and analytics, wherein we help our customer with a to provide their end customer a better customer experience. You name a bank, they are a customer. You name a telco, you name a ITITS customer. So how we help them with customer engagement platform, with automation, with AI-driven analytics, and that is how we have been helping them not only to retain their customer, but we are also helping them to cross sell and upsell also. So that is what we do. We have a global customer. We have around 8-10 global customers. A sizable chunk of our revenue is coming from outside India also, which we want to grow. So this is the first line of business, which is CX and analytics. The second line of business is more towards communication, wherein we set up communication platforms so that organization could interact with their end customer as well as within the premises. And we have been also supporting creating data centers as well as facilities for them so that they can have a very strong capacity in terms of serving their end customer. So some of the major blank close to 12-15 plus bank are our customer in this line of business, wherein we have a long-term contract of 5 to 7 years, because typically we work with in their compliance domain, and there is a regulatory requirement of having the data managed and stored for 7 years. So that's how you see a long-term contract in this line of business. And the third line of business is Exato IQ, which we have branded as Exato IQ. And this is where we have created several IP of ours, which is already being sold and deployed. Now we are making them compliant with respect to global standards. And our plan is, as we expand big in US and UK market, we want to sell more and more our IP, which could be a sizable chunk of revenue and profit from for our own. As I mentioned, we serve across vertical directly, indirectly. When we say directly, indirectly, we are working with direct customers. We are working with also outsourced BPO, which in turn are serving 15-20 customers. So if I am not wrong in saying that through these 150 customers, we have been serving more than 500 customers, because they have their own customer, B2B customers. So banking and insurance is our strength. And one of the reasons why we have been growing year on year is, yes, they are good paymaster. They have a good requirement, and more on we are managing their data and compliances. So there is a long-term stickiness also. Similarly, healthcare has been a growing sector. We recently last year got a 130 CR deal from one of a major outsourcer, which is a 5-year contract. And this is also helping us in scaling in this segment. Now with retail and telecom, yes, we have a steady customer base with manufacturing also. And then we have the second largest base in ITITS BPO KPO, wherein you name a large BPO or a large services organization, you name it, and we are their services partner. We have been providing consulting led services to them. So that's how our journey has been across these verticals. Our intent is to create a long-term partnership with some of the global brands. We pick and choose. We work with very selective brands. We don't want to dilute our value proposition, and we have developed a very strong skill set around them. So like NICE, you see, it's a NICE 9 billion market cap and a leader in customer experience. And then Mitel is a leader in unified communication. We are the biggest partner for them in APAC, and we have a newly signed partnership with a cloud-based ERP solution. So with this cloud subscription model, we see a huge jump in profitability as well as long-term contract. And this is helping us with a very strong ARR, average recurring revenue also. Like I talked about, we have been serving 12 plus global locations from India, and close to 25%, 24% of revenue is coming out of India. Basically dollar billing, which we see that it's going to increase in subsequent years. So that is how we expect a good jump in our revenue and profitability also in coming years. So a balanced model. We used to do a one-time deal a couple of years back, but now we are moving towards more cloud and subscription model, because that is also giving us a sustenance, and that is also giving us more services value, which is helping us to increase our profitability. If you see year on year, the ARR value has been increasing from 52% to 57%, and in coming years also we see a significant increase in that. Our order book is very strong. When I say our order book has increased almost four times in last 2.5 years. We started with a major order in of a large BPO in 2022, which was 125 CR. Then last year we got another 55-60 CR from a UK based customer. All these are global customers. Then, as I talked about, we are serving major private banks. And then we are also serving a very large healthcare BPO, a listed company in India, but a global company, where we got 130 CR of order. A very unique outsourcer which primarily serves airline industry and also a listed company in India. We are also serving them again long-term contract. And then we recently got a 90 CR deal from in September from one of a very unique customer which is into language transcription, and it's again a US based customer. So this is also a dollar order which is going to increase our dollar value. So out of 515 CR, we have successfully delivered close to 165, 167 CR. So this shows that we don't not only have the order book, but we have a successful track record of executing those orders. And our ARR value currently stands at 100 CR year on year. So for next 3 years, we have 100 CR of order book, which is going to be built, as well as there is a incremental value expected as we progress during the year. And as you see, I talked about all the leading banks. So these banks typically have 3 to 5 years of contract, again long-term contract. And the good thing about all this 550 CR order book is these are non-cancelable orders. So these are non-cancelable from customer, and these are non-cancelable from our product partners. That is how we stitch the deal, because we give them extra room for services. We provide very niche customized services. We help them in digital transformation, better customer experience, and that is the reason we got this non-cancelable order, which is giving us a guaranteed revenue over the next 3-4 years. Let me talk about this case study. So this is about that unique BPO which I was talking about. So basically, we closed a 40-45 CR deal, and we got some incremental 5-10 CR deal also this year. This 40-45 CR deal was closed last year. Now, what was happening is there was a legacy setup, one-time solution which was set up for a longer period of time, which was not helping the customer because the customers were approaching through multiple channels. So if you understand this customer experience domain, so there are 22 channels through which a customer can approach a agent, a customer service provider. It's voice, video, chat, mail, WhatsApp, all these channels. But these channels were not tightly integrated. So we deployed a solution, and we deployed this in record time, which is 21 days. Typically, these projects take 3 to 6 months of time, but we deployed in 21 days because of our very strong skill set. And that was one of the reason, through word of mouth, we started getting more and more order. So as a result of this, we got this second order through a very strong reference. It's a Tata subsidiary company based out of UK, serving more than 30 million insurance policies. Again, with this customer, our order book has been growing, and there has been some significant order which has come in September, and in coming months also we are expecting that. Again, we have deployed some very unique solution like speech analytics solution, workforce management solution, and quality management solution. All these solutions are a part of customer experience. So this is helping our B2B customer to serve their end customer in a better way, to resolve their call in first call itself, and to make that call timing shorter. So this is how we are helping our B2B customers so that they can serve their end customer better. Now, this is again another example. So this was in terms of size, this was the largest deal which we cracked around 2.5 years back, and this is a very happy, satisfied customers. We closed with 50,000 agents. They have added another 10,000 agents, and we expect a steady growth with this customer. It's a Nasdaq listed BPO, and while we are exploring a bigger contract with them in coming years, there is a huge possibility of expanding the 60,000 agent to three to almost double. So with this customer, we have deployed workforce management solution, and a very unique case study why this deal came to us. Our India-based partner, while the customer is in USA, is their workforce management solution was not working with the payroll system. This workforce management and payroll system were two global companies, and they were not integrated. So we created a IP which integrated the data, and so that the seamless flow of data was ensuring that a proper payroll could have been processed depending on the kind of work that people would have done, extra time, overtime, incentives, etc. So we created this middleware, this IP, and because of that, we got this deal. So what I want to emphasize is we are not only a consulting-led company who is partnering with global companies and giving licenses on subscription, but we are also building our own capability, our own consulting-led services, and that is showing a very strong face in front of our customers, and we are getting larger deals. Now, this is again, I talked about this is a healthcare BPO. We closed 130 CR deal last year, December 2024. It's a listed company. They got listed in last year, and it is promoted by a very prominent investor. So we have been successfully executing these deals, and there is a strong value add which we have done. We have not only migrated their legacy platform, but we have also deployed some advanced platform like speech analytics and auto summary and automation tools. This is with one of the largest bank. We had this deal. So it's a private sector bank, and so we deployed trading floor turret solution because the system through which they interact with their end customer, and we also installed a recording solution because these are high value transactions which could be recorded. So we got a 35 CR deal from this customer, and we have been contract of servicing this customer for next 5 years. So we are getting an annual recurring revenue also from this customer. Now, this is a very unique case study. Why? And this is very close to us because we have developed a IP on the flow. So what happened is this was a mutual fund customer which had a very peculiar requirement that they because of RBI guideline, all the call which is coming to a mutual fund customer service agent should be recorded. And for any reason, if the recording is stopped, the call should be disconnected. Now, this was not there in the product initially. So we have developed our own IP, which has done that. We have deployed that with this customer. So what I want to emphasize is some of these use cases with respect to IP, which is our Exato IQ division, which you see, there is a huge potential of taking this to global market and make it global standard GDPR, etc. And this is the journey we want to pursue in coming years. Now, with respect to our positioning, in terms of strength, we have been the biggest partner for some of the global biggest company in APAC. Now, the idea is how we can become their biggest partner in US region because that is where their bigger base is. So we are going to US. We are going to expand big in US. We want to diversify because we have currently serving 150 plus customers, but we want to increase that base to 500 plus customers in 2-3 years, and then we want to diversify. We want to take more and more offering. Idea is to get more and more budget out of that customer and serve it ourselves and get some managed services contract. You see incremental ARR revenue. The reason is that we are getting long-term contract as well as we have very strong domain expertise, which is helping us to stitch that. In terms of our weakness, yes, you can say that we are a company of this size, which is a current limit, but we are turning this weakness into strength because with this listing, we will be building more credibility, and our idea is to how to expand globally and add more people in delivery in India. While it can be said that we have reliance on certain partnership, but that is not completely true because all our customer contracts are direct. So and they are non-cancelable. The reason why we do cloud subscription is the customer has been told that there is an initial cost which is there, which ultimately we pass on to our product partner. But these contracts should be non-cancelable for a certain period of time, whether it's 3 years or 5 years. So there is no as such dependency, although currently we are, yes, riding along with them and acquiring customer. Now, our IP development is in progress while we have some successful closures, but this is a work in progress. And in this listing also, we want to deploy some part of that funding for IP development because we want to make it for a global standard. As I said that, yes, India is our biggest market and we are going to expand in India, but we are going to expand big in US and UK also. So you can see a substantial revenue coming from international market. Now, a global customer experience market is 14 to 15 billion, and this is going to increase with a CAGR of 18 to 20%. So there is a huge opportunity outside, like it used to happen 20 years back. A lot of BPOs outsourcers were coming. So with AI, with agentic AI, there is a lot more technology adoption is going to happen, and that is where a technology company like us is going to get advantage. In terms of threat, if some people can say that technology is changing rapidly, and every 15 days or every month there is new advancement, but we are quite prepared for that. And that has been our journey since 9.5 years. We founded this as an analytics company. We have cumulative experience of 200 plus years. If I talk about top management, my CTO, my sales head, and the core team in this domain only. So we are primarily focused on this domain. So we are ready to mitigate those challenges. We understand GDPR and DPDP law, the new thing which is coming. In fact, there was an article in one of the newspaper which says that because of DPDP, the IT spend by the customers is going to increase by 10 to 30%. And their AI is also going to play a role, and there we are also going to play a role. So again, we are going to get benefited out of it. With respect to talent constraint, yes, there is reliance on manpower, but the top management team is quite intact and they are with us for last 3 to 5 years and even more than that. And we are regularly training and building, adding new people to the team. We also have a plan of tying up with universities and launching the courses so that the students should be ready well in advance with these knowledge, and if once they join us they could be a ready-made service engineer for us to take it to market. In terms of management, so I drive the business. I'm the chairman and managing director, have 22 plus years of experience and work with large organizations like TCS, Wipro, NICE, etc. Swati manages HR and operations for us. Then we have Abhijit as a non-executive director. He is more on legal side. Then we have very two prominent name. One, Mr. Dr. Onkar Rai. He was head of STPI, managing 35,000 CR worth of business for all the ITS companies. And then in the last stint, he was also head of startup for Odisha government, which he served. So he has been guiding us in terms of his intellectual knowledge and how we can expand in the market. And he's also monitoring us with our compliances, etc. Mr. Vijay Tyagi is another independent director, which takes care of compliances and other stuff. And he's also a very prestigious name, especially in BFSI industry. This is the top management team. Hassan is our CFO, and I have Ms. Geeta Jain also as our company secretary. They both are on this call. We have Anurag as our sales head for CX, having 30 plus of years experience in customer experience. He has been driving a major chunk of business for us. And then we have our CTO, Mr. Gopinath Belur. I wanted Gopi to join this call, but for some personal reason, he is not here. So Gopi is a very prominent name in this industry. You name an award, we have been clean sweeping all the awards for all these major partners. You can see all these awards in my cabin. There we have won 15, 20 awards. We are getting 4, 5 awards, all the top partner award year on year, and that shows the credibility and the strength which we have built over these years. Industry insight. So in the IT industry is going to boom, and with AI also the technology spend is going to increase. And we also have a plan of creating hubs in tier 2, tier 3 cities so that we can have a cost effective manpower. We also to create employment and this thing on AI side, so that we should be ready on AI side. The idea is to set up a sales base in US and UK and Singapore, because that is where high value, high revenue, high profitable customers are. But we want to continue serving them through India. And all this is a possibility because the advent of tools, like I see a lot of development tools which has come, and that is also helping us in our IP development with lesser cost. You might be knowing about this data. So government AI mission, they are deploying close to 11,000 CR, and a lot of data center is coming, and AI related, analytics related investment is coming. Google is setting up its own 2 billion investment in Telangana. So we are going to get a part of some of these. While we expand big in international market, our focus is also going to be in India, how we can get benefit out of it. I think with this, I would like to finance team to present the numbers, talk about the numbers. So let me go to the financial slide.
Thank you, Apur. Good evening, everyone. After the company presentation, I would like to take you all to the financial side of the company. So, as you can see, over the last 3 years, our company has demonstrated consistent revenue growth from 72.76 CR in financial year 23 to 124.23 CR in financial year 25. We have not only increased our top line, we have significantly improved our profitability with EBITDA margin expanding from 8.36% in financial year 23 to 12.65% in financial year 25. Our PAT margin has also increased from 6.95% in financial year 23 to 7.85% in financial year 25, and reflecting strong bottom line growth alongside our top line growth also. When you see the half yearly numbers, financial year 26 half yearly numbers, we have clocked around 71 CR of turnover, net sales, and the profit registered as on date 30th September is 7.26 CR, which again reflects a growth not only in EBITDA but also in the net profit terms. So this is all from the profit and loss account statement. Now we can move to next slide. So the strength of the balance sheet. So next slide, please. Yeah. So when we come to the balance sheet, it can be observed from the top of the of the slide that the company has a strong net worth of around 50 CR as on half yearly year closing 26, and last year it was 42 CR. And when you come to the borrowings, I'm happy to share that the debt equity ratio is very marginal. We have almost reduced to from 0.75%, from 0.75 to is to 1 from 25 financial year and 25 to 0.56% is to 1 in half year ended 26. So we are very comfortably leveraged. We don't have relying on very much higher debt side. So that is about the equity and liability side. When you come to the asset side, we are basically a asset light company. We operate with very less of fixed assets. However, as Apur has taken you all to the previous slides, you could have heard about the intangible developments, the product developments which the company is into. So we are focusing on developing more and more of our own product. So intangible assets have been growing for last few years, and it is slated to improve further. We will have our own IP. So that is there, and then we have a strong, robust current ratio also, which is around 1.7 to 1.8 is to 1 last financial year, and also for this half year ended 26. So we have a sound financial position which is improving day on day with the sound operational growth of the company. So the management is not only concentrated on the revenue side, we are equally concentrated on the strengthening our bottom line. So with this, I would like to request Team GYR to take you to the issue highlights. So Team GYR, please.
Thank you, sir. Good evening, everyone. Let me now take you to the key highlights of our upcoming IPO. Our IPO will open on November 28, 2025 and will close on December 2, 2025 for public. The anchor bidding will take place on November 27, 2025 and it will close on the same day. The expected listing is scheduled on December 5, 2025 on BSE SME platform. The price band of the issue is fixed at rupees 133 to 140 per equity share. The lot size is 2000 shares and thereafter in multiples of 1000 shares. The minimum investment required is 2,80,000 rupees. With regards to total issue size, the total issue size is up to 26,75,000 equity shares, which includes both fresh issue of around 22,75,000 shares and offer for sale component, which is around 4 lakh equity shares. Now, at the upper price band, the fresh issue amounts to 31.85 CR and the offer for sale amounts to 5.60 CR. And the allocation structure can be seen in the slide like market maker, anchor, QIB, net QIB. So going ahead with the pre-issue and post-issue paid up capital, the pre-issue paid up capital of the company is 7 crore 79 lakhs and the post-issue paid up capital would be around 10 crores. Now, next slide, please.
So utilization of net proceeds, the company is going to use 15 crore and 72 lakhs towards the working capital requirements of the company, 6 crore and 80 lakhs towards the product development, and 2 crore and 53 lakhs towards the repayment of the borrowing. And the rest of the amount will be used for the general corporate purpose. If you have any other query, you can contact us at info@gyrcapitaladvisors.com. Thank you. Thank you, everyone.
Thank you for the detailed presentation and valuable insights shared. We will now open the floor for the question and answer session. Dear participants, if you have a question, please use the raise hand feature and we will take your questions in order. We request each participant to briefly introduce themselves before asking their question. A gentle reminder, each participant may ask up to 2 questions, after which we request you to kindly rejoin the queue should you have any additional questions. We will take a moment to line up the first few set of questions. Our first question comes from Mr. Rakshit Shetty. Sir, please go ahead.
Hello, sir. Good evening. Sir, this is Rakshit Shetty from BSNR Capital. So my question is, what would be the PAT and revenue guidance for this FY26 and FY27? And also, will PAT margins remain the same, or do you see any further growth?
Thank you for the question. I would like to take up the question. As I already informed, we'll talk about the top line first. As I already informed that we have already reached 70 CR of top line in this half year, and this is expected to grow at the same rate. So we are in a very sound situation where we can see a robust growth in our top line. And when you come to the bottom line, as you see, the PAT margins have also increased from 7.85 percentage to 10.22% in half yearly closure of this 30th September 2025. So we envisage to continue this growth, and it will be around this margin only. The reason why this margin has increased is because of the more of the services component, because of the we are moving from the on cloud based to subscription model. So that is what we
So
foresee.
FY26, so you're expecting around 16 CR of PAT. So you're doubling it. 15,
See,
16 CR.
with this growth, whatever we have achieved, we are trying to rather we are hoping to improve it better, and we will achieve the whatever we have achieved in the half year. We'll going to double it.
Okay, sir, is it conservative or is it you can achieve it?
So, Rakshit, this is conservative. I will tell you the reason, because we are moving from on-prem to cloud subscription model, and that is some heavy services led, if you understand this. Also, our international expansion has started. So we have been dealing with multiple customers. So we expect that, yes, some good closures there also. So being in international market is definitely going to help with still some 4 months, 3.5 months in this financial year. So both this year and next year looks good from revenue as well as profit perspective.
So FY27 you have not guided, sir?
That's what I said. From this year, so FY26 and FY27 looks very good from revenue as well as profit growth perspective.
So what would be the percentage that you grow, CAGR?
See, industry is going at 18-20% CAGR. We are expected to do much better than that.
Okay. Thank you.
Thank you.
Thank you. Our next question comes from Mr. Deepak Poddar. Sir, please go ahead.
Am I audible?
Yeah.
Yes, you are. Please go ahead, sir.
Okay. So something on your order book. I mean, so you mentioned you have around order book of 515 crores, out of which 167 is already delivered and 350 crores is in pipeline. When you say in pipeline, I mean, this is the order that we've already got, right?
Yes, these are non-cancelable confirm order. We already have orders in hand.
Okay. And what is the execution timeline of this order?
So execution timeline is 3 years, 3 to 4 years.
3 to 4 years. Okay. Okay. And then how should one look at your order book going forward? I mean, what sort of growth we can expect in order book, or any target we have to achieve order book size by FY26 or FY27?
So Deepak ji, like I mentioned, the industry is expected to grow at 18 to 20% CAGR, but our growth should be much better than that because we have not explored much in the international market. So with international market, the size of deals is also going to increase and the bottom line is also going to increase. So we expect to do much better than what is the industry growth is.
Okay. And when you say international, I think last year it was about 24% from international market, right? So how would the trajectory be like going forward?
So we are expecting in 2 years, it should be either 50-50 or 60-40. So at least 50% coming from international market. We are going to focus huge on international market. The prime reason is we already have established delivery team. So now building on top of that delivery team is something which we are planning.
There's some disturbance somewhere.
Yeah, there was an echo. Now it's good.
Yeah. No, so around 50-60% from outside India, and we already have an established delivery team. So which will help you enable that.
Yes, so we already have established. So we plan to have delivery in India. We currently have delivery based out of Chennai and Delhi, NCR. We plan to have one more delivery center in Pune because some of our product partners reside there. They have their global support center there. So we plan to have delivery based there. But current delivery team is equipped to handle 20-30% of incremental revenue. So once we start expanding, having some a major footprint in US and UK, then we expect that a lot of closure should start happening there. Now we have already made our mark. So like I said, that for two reasons, we have 8 to 10 global customers, and some of these global customers like that Nasdaq listed BPO, we have 125 CR contract. This UK pension insurance customer, we have 55 CR contract. This healthcare BPO, we have 130 CR contract. So these are very well known in international market. Now we are getting a lot of word of mouth reference. We recently closed a 90 CR deal in September from again a healthcare transcript service provider. Since we operate in this global outsourcing market, so they have some base there also. So what we are expecting is once we start having a footprint there, we have local people there and some foreign people also working as a part of Exato. That will give us a strong value because meeting customer in person and getting things executed gives a lot of confidence. And we work in a very niche industry, so a lot of face value and a lot of ground presence is required. Hence, we see a good growth once we are physically present there in US and other international geography.
US and Singapore, I think that's one other area that
US, UK, and Singapore.
So UK also we have a subsidiary there?
No, we don't have a subsidiary, but we have a major customer based out of UK, an insurance customer. So, and we are pursuing a major deal in Spain, Madrid. With both these, we want to start our operation in UK as early as January, February.
Okay. So given your now that international revenue mix is likely to go up, and that is a higher margin business. So what sort of aspiration we should have? I mean, in 2 years, a PAT margin which in first half was around 10%. So in 2 years, what sort of aspiration we can have in terms of PAT margin?
Both revenue and PAT margin is expected to grow drastically, much better than what is the industry average is, because for us, this is a very open market. So we will be reaching out and you can understand some of the good work we have done based out of India. So customer will have those references. And the deals which we are doing based out of India, all these are long-term contract, higher revenue as well as good margin deals.
So if you can quantify that, I mean, in 2 years of 14-15% PAT margin is something that we can aspire for. Would that be a feasible, or I'm being too optimistic?
Deepak, see, I would not like to comment on numbers, but as I said, that industry, we will be doing much better than industry growth rate.
No, I'm not talking about growth rate. I'm talking about margins, PAT margin. Yeah.
PAT margin also, you can understand. So if you have an international market idea, you can understand that the deal value as well as the margins are much bigger. So let me give you a reference you can so that relate with.
Yes, yes, yes.
We closed a deal worth 90 CR with a healthcare transcript service provider, which is a US based customer. And you will see shortly our dollar value also increasing. So we did that $10 million deal. So to be very precise, it is 89 CR deal. Out of that 89 CR, initial services was 5 CR, 5, 6 CR, and then subsequently there will be more services. If we would have done this deal in US, this could have been 25 million deal, close to 200 CR. Why we are saying this? We have negotiated with this customer, and this experience has been with other customers also. I talked about multiple deals. So this is a natural answer. You can understand if I say that it could have been 2.4, 2.5 times. So the deal value is going to be bigger, and the profitability is also going to be better.
Understood. So I'm done. And just one last small thing from my side. I mean, in terms of your business model as such, would that be a right to say that we are kind of a system integrator where we facilitate the third party, I mean, software like Nice and all to integrate to the customer system and provide the solution as per customization of the customer?
So you can say that we are a company like Accenture McKinsey at the front and TCS at the back end. TCS has some global partnership, but they have a very strong services factory. McKinsey is like doing a lot of consulting projects. So all these projects would not have come to us if we would have been a typical system integrator, because they would have done this with anyone else. But it's more consulting led, because this is primarily working with customer in their data segment, understanding their entire customer journey and giving the best output. So we have our own proprietary models for healthcare, for BFSI, for retail, for travel. These models we are showcasing this to customers, and that is the reason we are getting international deals. So you can say more a consulting led company, which definitely has some product partnership, and that is how we are scaling.
Okay, and you kind of suggest the client that this is what you might need for your better efficiency.
Sorry, come again. I missed your.
So you kind of suggest the client that this is a solution that you might need for a better efficiency of your operation.
Absolutely. Not only that, not only the solution, but we also guide them in terms of what kind of reports, parameters they should consider. What if they want to measure their net promoter score or the CSAT? What are the parameters? How they should look at? What kind of visibility they should have? What kind of scope of work they should define when they are addressing their customers, and what type kind of integration they should have between all the systems and their CRM, etc., etc. And we have a much bigger play. Where we are not limiting to these partners, but rather we will be going to stitch the entire ecosystem, because there is an entire ecosystem of data analytics. There is the ecosystem of CRM service provider. So if this all comes together, there will be much bigger play for us.
Understood. That's really helpful, sir. I would like to wish you all the very best.
Thank you so much.
Thank you. Our next question comes from Mr. Bharat Reddy. Bharat sir, please go ahead.
Can you hear me?
Yes, we can hear you.
Yes.
Sir, is there any revenue from legacy business as such, or completely from digital cloud and other digital services?
So legacy business in the sense, see, our 80-90% of revenue is coming from digital cloud, digital transformation, customer experience, analytics, etc. Legacy business in the sense that we have done some hardware projects, but that was part and parcel of a large deal. So we did not wanted to leave any money on the table. That is the reason we picked it. So legacy business has been, like I mentioned in my initial presentation, we started as an analytics company. We founded this. The first deal which we closed was for Rajasthan Safe City, wherein we deployed video analytics solution. So and for their command and control, and then from video we moved to voice, text chat, etc., etc. So we founded this as an analytics company.
Okay, great, sir. And sir, you are explaining about AI agents during your presentation, right? So can you just explain me, let's say you get an order where you have to implement some agents. Can you explain if there is any one-time payment and recurring payment in that particular order?
So majority of the payment is recurring. One time is generally for services, like I talked about this language service provider, the 90 CR deal. In this, the one time services is close to 5 CR, and the recurring value is close to 22 CR per year, which is you can break down in quarters of 5 CR of billing per quarter. This is cloud subscription deal for 5 years.
I mean, like, can you just explain when you say recurring, how does you get paid? I mean, is it based on maintenance support or is it based on the products that you build for them?
No, so see, we work with global companies and partner with them for cloud subscription licenses, which is typically a customer experience analytics and AI based solution. Now, when we close deals, say, let's talk about this 90 CR deal. If you break it into five parts, it is 18 CR year on year revenue for us. So same. So what we do is we bill this 18 CR for 4.5 CR quarter on quarter. So there is a certain number of licenses which is given to them. Initial 3 months it takes for a cloud instance to get ready and to get data center, etc., all that ready, and telco and all that. And once that is up, our billing starts. So we get one-time services, which is at the start of the contract, and there is some small amount of services year on year. But majority of this is cloud subscription license, like I talked about, 4.5 CR year quarter on quarter billing. So we bill them every quarter, and at the start of the quarter, and we get payment within 30 to 45 days.
Okay, so got it. Is there any product, I mean, customized product that you have built for a particular client and used it for some other clients as well by making few or like few modifications, something like that?
Yes, we have done that. So like we deployed a product with this Nasdaq listed BPO. Now we are developing this into full-fledged project. We have given this on POC basis to some other BPOs. The second product which I talked about for a mutual fund customer, we have already deployed with a major mutual fund customer in India, and we are talking to some of the other mutual fund customers there. So some of these IPs which I talked about, that's we are making it global standard because that came as a use case for us. But this is being now demanded by our product partners that we should take them globally. So that's how we are progressing.
Can you explain a simple use case of that product?
So a use case is when we displaced competition with this Nasdaq listed BPO. So we deployed 50,000 workforce management agent. Now this workforce management agent was deployed. So the earlier product was working with their payroll software. The payroll is again a global company. So they were tightly integrated. But this new workforce management solution did not had any integration or any connection with that workforce management. So payroll system. So the payroll system did not had a data which employee had worked overtime, which employee had worked lesser time, he was on leave, who was done that and all that. He should be incentivized. Without that, a normal payroll was about to be processed. Now this was a deal breaker. So it was very important to create a IP which can create a seamless data flow between workforce management as well as the payroll system. When we created that, we have given that on one-time cost as well as subscription. We are charging subscription as a part of package, and this is helping us. Now, this workforce management is transferring all the data in terms of who has worked overtime, who has done that, and basis that that payroll system is giving output for payroll processing. So this is one of the use cases.
Understood. How much percentage of the total revenue that you get from this particular product?
See, understand the product development is a journey. So far, whatever we have done is based on customer use case because we had a deal on the table. Now, this requires significant investments also, which we have been doing. Now, there has been some so we have been developing total 5 products. Out of this, some we got orders from for 3 or 4, and we have already did one with a very large bank. That deal was close to 1.5 CR. This BPO, the deal was again 90 lakhs, and then some 10-15 lakhs subscription. Annual, not subscription, it's annual AMC. And the third one is with this mutual fund customer. Now we are building a CCaaS platform, customer experience as a service platform, basis the understanding, the knowledge which we have gained working with these global companies. And these global companies are typically Range Rover of the market. So not everyone can afford it, but they have their own market, and that is how you see the deal size is very big. Now we want to develop a Toyota. Why I'm saying Toyota is also having good feature, good reliability, and what learning we have working with these. We know their feature functionality set. We have been deploying 1 lakh agent for them. We have been supporting them 24 cross. And so we know that what kind of feature functionality is possible. Obviously, that is not possible. They have been the global companies have been spending millions of dollars, and we could have hardly spend 1 or 2 million. So, but what we want to do is with some good feature set, we want to launch it in market, which may happen in 8 to 10 months time. So with this, we see a good revenue stream coming from our own IP segment also. Currently, it is closely around 1% from some customers, but we are building that, and we see a good chunk of revenue coming from this IP.
Sure. One last question before I join back the queue, sir. Would you like to give any revenue growth guidance in percentage terms for the next 2 to 3 years?
Like I said, 18 to 20% is the CAGR. But we are understand the pattern of how we are going to expand post IPO. We are going to expand big in US region. India market, we are already the market leader, and we are going to be part of some of the large initiatives because we have that huge amount of we have been managing huge amount of data for these 150 enterprise customers. Now with agentic AI, the data pattern we understand completely. The customer journey we understand. The interaction we understand. Why a customer has called, whether it was a good call or a failed call, whether it's an escalation call, whether that customer is coming, we have all that insight. We have given this as a report. Now, a service provider has to take an action. It is depending on the bank or a telco whether he wants to take action, and he will take an action depending on the profiling of customer. Now, with agentic AI, what is going to happen is at least he is going to serve those customers better. Like you also understand, there were some 5-6 banks who got a banking license around 7-8 years back. Now they want to compete with the top largest bank. So we are helping with them with these technologies. So deploying these technologies is definitely going to increase technology spend and going to increase business for them. So this is what we are going to do in existing customer base. Now with respect to new customer base, which we want to create globally. So with AI, lot of agentic to AI tools is going to be implemented. And we are also going to ride along with these product partners because we have created a success in APAC. Now they also know. In fact, the top people knows us. So ride along with them and acquire customers there. So with these two, and then we are going to add some business in new line of verticals like ERP, and we are going to promote our own IP solutions also. With this, you can see a good incremental growth in revenue as well as a very good growth in profitability.
Sure, sir. Thank you. I will join back the queue.
Thanks, Bharat.
Thank you, sir. Our next question comes from Mr. Abhijit. Abhijit, sir, please go ahead.
Thank you. Am I audible?
Yes, you are, Abhijit. Please go ahead.
Yeah, thanks for the opportunity. I have a couple of questions. The first question is regarding the receivables. So as I can see in the first half of FY26, the receivables was around 70% of the revenues, which used to be around 20-25 in the earlier years. Similarly, there was an increase in debtor days as well, which again is very high as compared with the industry standard. So what was the reason behind that? Was it aggressive booking or?
Yes, you are right, Abhijit. So we closed some very good deals, and most of this billing happened in August, September. So typical the payment realization cycle is 75 to 90 days because like I mentioned, so we take 2 to 3 months in terms of getting the cloud instance ready and all that setup ready, and post they go live. So we have a very aggressive booking during this domain. The second thing is there were a lot of services order which were also there. Now services take some 2-3 months of time before that is delivered, and depending on project milestone. That is the reason you see a lot of. But a part of that, I think 50% is already realized in the last 45 days.
So we expect this to moderate to what, 20-25% of the revenues, let's say by the end of FY26?
Yes, it should be around that.
Okay. And as you mentioned, you are entering the ERP market and the cyber security. So what is the timeline for this, and what kind of investment will be required for these new segments? And adding to this, this kind of seems like a saturated market. So how do you plan to compete? What will be your go-to-market strategy?
So, Abhijit, very good question. So, first of all, our idea is very clear that we are going to partner with a mid-sized company, a company who has much hunger like us. So, we have identified a company called Acumatica, which you have seen on my slide. That's a mid-sized cloud ERP company targeting the not very large enterprises, but mid-sized customer. Now, they have 1,500 customers already, and they got some 2 billion of funding. So, this shows their credibility. Now, whether they want to be limited at 1,500, no, not at all. If I talk about SAP or any large player, they will have 10,000 plus customers. In fact, more than that, much more than that. So partnering with these companies will give us lot of value because they will see that, okay, so they also are expanding and so are we. Now, since we are going to create an international base, so obviously we don't want to just give one line of product and the sales team should be occupied with that. Rather, we are going to create a structure wherein the alliances practice team should be based out of India, along with solution as well as delivery team, and the feet on street will be the people who are managing the customers. So like some 4, 5, 6 people in US to start with, and similarly 2, 3 people in UK and 2, 3 people in Singapore. Now those people will have multiple solutions to take it. One would be the unified communication and infra, second would be the CX and analytics, third would be ERP, and the fourth will be our own IP. So that is how we plan to expand, and the partnership which we have chosen, that is already proven. Although the idea was very clear, we are not going to partner with SAP or Salesforce because they have too many partners. Rather, partner with someone who has this appetite of growth, and there is a huge potential. Now, one more reason why this ERP partnership is important is they are primarily cloud based, and they have a very unique pricing model wherein they say that take my licenses and you can pay as you use. So this is again going to create a difference. So with this unique value proposition, we are identifying partnership, and that is how we are taking to market. That's one. Now on cybersecurity side, see, we are again identifying some players which have a very unique positioning. We are not going to say for the sake of doing everything. Like I said, that our focus is going to be customer experience and analytics. But if I'm acquiring 500 plus customers, so they should be a source for additional revenue, cross-selling and upselling. So that is how we see the market, and that is how we see the potential. And there should be a possibility of more and more services. So that is the how we are segmenting. We are finding the line of business, the areas wherein we should focus on. Now, talking about the investment, basically it is not too much of investment. Why? Because our model is hybrid. See, we are anyhow going to spend on manpower for international region in terms of sales hiring. Now, giving them an additional portfolio will strengthen and help them achieve more numbers as well as more number for company. Now, we will have a product expertise specialist based out of India working in US hours. We are going to have a 24/7 facility, and they're going to do that. And we will have a delivery team based out of India. So all this is keeping our costs down, wherein getting additional thing to sell for the new team which we are developing will give us much more. So not very significant investment, and whatever investment we are going to make, we are planning to help us with multiple revenue sources. That's the plan.
And on the timeline, so by when?
Timeline ERP, we have already started 3, 4 months in pipeline. So we have already started. Partnership is already signed, and we are actively working with some customers. We hope that some closure should happen by March.
Okay, and regarding the margin profile, so what is the margin in the services segment when compared with the existing model?
So services segment typically have 35 to 40% margin.
Gross margin?
Gross margin would be anywhere around 50 to 60%.
And of the existing business?
See, existing business, like I said, that it is cloud-based deal, and there is initially we wanted to build, use this thing. So existing business, you can say 20-25%. And again, I also mentioned that we are primarily present in India. So all the large banks you see, these are Indian banks. I should not say this, but yes, they have here India is a price sensitive market. So as we move global, be international market, the possibility of earning better revenue and profitability is going to be there.
One last question before I fall back in the queue. You earlier mentioned about non-cancelable part. So I was not able to wrap my head around that. So are there any clauses due to which a customer cannot cancel the order, or how is it?
That's the prime clause, wherein when we sign a contract with customer, we say that we are giving you something very ready-made, which can help you immediately in terms of bettering your customer experience, revenue, etc. So these should be non-cancelable contract. Depending on customer plan budget, they sign 3 to 5 years. Someone who has a plan of 3 year, he can sign a 3 year contract. Someone who has a plan of 5 year, he can sign a 5 year non-cancelable contract. Let's understand why they do so, because they are not paying one time. There used to be lot of one-time deals wherein they have to do initial investment. Here, still the investment which they are planning should be for 3 to 5 years. And as I said that it depends on appetite. The healthcare customer which I talked about, I can take the name because they have given a consult. It's InVenture Healthcare, which has been listed last year. It's a Rakesh Jhunjhunwala promoted company, and we have signed a 130 CR of non-cancelable contract with them. Similarly, this Nasdaq listed BPO 125 CR non-cancelable. This UK-based pension insurance customer, we have 60 CR non-cancelable contract. Again, why these two Nasdaq and this said 5 CR? Because they had an appetite for 5 years. They said, "Oh, 5 year, my business is going to be there. These are good service provider. I will go." But this UK pension fund said that, "No, I will try for 3 years." So that is how this is working. But these are non-cancelable, both from customer side as well as from product company side. And there will not be any incremental price also. Post contract, there could be, which we are saying that if you're signing for 3 years, after 3 years, we may increase the price. So they are willing to take risks, it's their risk. But the people who are signing 5 years, they are safe for 5 years. That's how it works.
Understood. So what part of our order book is non-cancelable right now?
Around 90%.
Oh, that's great. Thanks for your detailed answer. I have a few more questions. I'll get back in the queue. Thank you.
Sure, Abhijit.
Thank you. Our next question comes from Mr. Paran Sharma. Please go ahead.
Good evening, sir. Congratulations for the IPO. So my question is, sir, we have three broader kind of offerings, out of which our unified communication and infrastructure, which is like a system integration, is coming down, and our analytics and customer experience segment is growing up, and that is also bringing up the margins for us. So what kind of percentage mix we are looking at by the end of let's say FY27 or FY28?
See, this CX business is going to increase year on year. And you rightly mentioned infra and unified communication is going to be stagnant and or slight increase. Why I'm saying slight increase is this business also, this partnership also we would like to take globally. It has a bigger market in US, and one of our competition, which I mentioned in DRHP Black Box, is a major player in this. The partnership which I am talking about, Mitel partnership. Now let's understand Mitel partnership. Earlier, this company was very long back. It was Siemens. Then from Siemens, it became Unify. Then it became Atos, and now this is Mitel. Now, the kind of success we have created for this partnership in India. Lot of people got promoted and they are now at top shots in Mitel. So they are saying that come to international region. Now it is also pick and choose for us. But one thing is very sure that we already have a very strong skills of delivering these projects. In fact, when we were talking to Black Box, they also said that, so we have a relationship with Black Box. So they said that, why don't you do services for us? But that discussion is in limbo. Again, we do not have that US presence. So we need to be in US to stitch all these discussions. So you rightly mentioned our focus is going to be to expand more on, because that is more a profitability side. But the base we have, we are going to utilize, and it could be slightly growth only you will see on that side also.
So does that mean that it also improves the working capital cycle for the company? Because we are more dependent on the services and lesser dependent on, yeah.
Absolutely.
So, sir, how about the margin difference in both of these segments?
See, this is typically 10 to 15% margin, and other one is 25 to 30% margin.
Yes,
almost.
because we are seeing the trend in the revenue as well as the changes in the margins and the way Black Box operates, their margins are like on the lower side compared to our company.
Yeah.
So, sir, I was curious to know the products on which you are working and which will be utilized, like IPO money will be utilized to develop them. So, can you please explain briefly about the three products which are, you are developing, which will be utilized from IPO?
Right. See, the first product is our own CCaaS and CPaaS platform, customer experience as a service and platform as a service. Now, there is a huge market for this. Like I said, that we are building a Toyota. So, like the partnership which Hero and Honda had, they partnered, they launched Hero Honda. Now, Honda went separate way, Hero went separate way. We have global companies from which we have learned a lot over last 10 years, and prior to that also working with them, we have learned that, and we know that feature function, we have been implementing them, we have created some data model report, etc. for them. Now we see as I said, that they are Range Rover of the market, so we see a possibility of creating a Toyota and then taking it to SME market. Now SME market will also pay you well if you have certain feature functionality, AI enabled stuff, which you can develop and give it to them. So that is one of the flagship product which we are developing, and we are expecting that in 8-10 months of time, or probably a year's time, it should be ready for monetization. That's one. Second is the second demand which we see is because of compliance is the CompliCall product, because that product is very fit for this insurance and banking domain. For some reason, because as you know that all these financial related calls should be recorded and stored for 7 years. For some reason, if recording is stopped, the call should not continue, because customer may share sensitive data or may ask certain questions which could not be answered properly. So it could be a compliance issue for that particular bank. We have created that product, already installed with a mutual fund customer. We are talking to multiple other banks, but they are asking for more feature functionality, and they have added more scale. So that needs certain development. So that's the second product. And the third is a user access management, which again we did it for that largest bank. It was 1 CR value for us. Again, this is also something which can be marketed for other banking customers, especially in India. But this mutual fund can be marketed in APAC and global market also. So these are the three products which we are working.
But itself, my last question, as we are operating more on ARR, is this the reason why our trade receivables look like slightly higher, because our revenue earning model is slightly changing and shifting more towards ARR?
You are right in saying that, but like I mentioned previously, so there has been some very aggressive, good order booking happened in last 6 months. But you rightly said that the revenue model has changed. Things going more on ARR side, cloud subscription deal, which is a value add for us. Like I mentioned, I have 100 CR ARR year on year. So if I do nothing, also I will have 100 CR of billing guaranteed, and these are non-cancelable orders. But the idea is how to increase that 100 CR with a very good growth rate. So that is the reason.
And sir, we do earn good amount of cash, and we have good cash bank and balances and all. So do we also look at the more aggressive partnership or some small mergers and acquisitions in future, so we
Yes,
can expand? Yeah.
we do have organic and inorganic growth both planned in future.
Thank you so much for answering my questions. All the best for the IPOs.
Thank you, Pawan.
Thank you. Dear participants, please feel free to ask your questions. Mr. Rakshit, do you have follow-up questions? Sir, we have a few questions in the chat box. Shall I go ahead and read for you?
Sure.
Okay. Our first question is from Ms. Sakshi. What is the desired bifurcation of revenue between domestic and international geographies?
So currently, okay, desired is something. Desired would be more and more international, because it's a high value and high margin space. Currently, we have 76 and 24, wherein 24% is coming out of India and 76 is coming from domestic. But in couple of years, the significant portion should come from international region. We want to service from India. but we want to sell it more in international region.
Thank you. Can you please explain the deployment of IPO proceeds into the development of which product?
So I already talked about three products which I just explained. CCAS
Right,
platform,
sir.
company call, and UM.
Okay, sir. How is the revenue recognized on the books? Does it change based on the type of order?
Sorry, come again?
How is the revenue recognized on the books? Does it change based on the type of order?
No, we have a consistent accounting policy, and the revenue is recognized on the standard basis. We don't change the revenue recognition based on
Okay, sir. What are the reasons for sudden increase in EBITDA and PAT and sustainability of the same?
See,
See,
the reason for increase in EBITDA impact, as explained by Apoor, is that we have moved from on-prem to cloud deals, and there are see our offerings has a component of license as well as services component, right? So now the services components are increasing. That is why our margin EBITDA and PAT has also increased. This is the
and
basic.
this is going to continue in future also because we are
It is very much sustainable, and we are going to improve it
further.
Okay, sir. Are there only order-based requirements of clients or immediate resolution requirements also?
Sorry, come again? You should understand question.
Are there only order-based requirements of clients or immediate resolution requirements are there also?
Immediate resolution also. We have a very expert team. I'm actually very proud of my team because they have got extensive experience working in this domain. So we have immediate resolution. In fact, we have done that in past. Some of the last deals happened. We have provided immediate resolution. I talked about IP also. That is also a testimony of that. Couple of IPs, the
Okay,
insurance also, and the Nasdaq Mala also BPO.
okay, sir. Sir, who is are comparable in the listed space?
So I talked about Black Box. Black Box used to be AGC, which is Avaya Global Connect, and they were prime players in this market. Then they acquired Black Box and they renamed it as a Black Box. So they are one of the competitors in listed states. In globally, there is a company called T-Tech Digital, which is into this space.
Okay, sir. Next question is from Mr. Rajesh. What is the impact of Trump tariffs from the USA business?
No, actually, outsourcing. See, technology adoption is going to increase. So, Trump tariff, etc., is not going to impact because we are going to sell more in US, and we are not talking about only our IP, but we are also talking about global companies which are either US based companies as well as the Israeli MNCs. So we don't see any impact. In fact, we see a growth because more and more technology adoption because of AI is going to increase the technology adoption. There could be a reduction in manpower, which is that industry is going to be impacted, but technology industry is going to boom.
Thank you, sir. Next up, we have a question from Mr. Akshay. Perpetual license revenue is decreasing year on year. Going forward, are we going to completely be dependent on recurring revenue?
See, our focus would be more on ARR, to be very honest, because cloud subscription deal, more services, these are high value, long term contract, more bottom line, guaranteed top line, guaranteed year on year billing, non cancelable contracts. So we are going to continue that trend. In fact, with not only CX and analytics, but in ERP business also, we have started negotiating customers for long term contract, which usually the OEM partner itself was not doing. So we are talking about 3 years long-term contract non-cancelable. So yes, we would like to focus more on ARR business.
Thank you. Next up, we have a question from Mr. Saurabh Vyas. What is the moat of the company as compared to its other tech giants of India, and who are peers for the company, which you have already answered?
See, understand, we have 200 plus years of technology experience in customer experience domain. Now we are developing our own IP. We understand how market is going forward. The IP which I'm talking about is not plain vanilla IP. This is AI-enabled CCaaS platform. As I said, that we already know the feature functionality which is there in these large industry product companies. We have understood that, like if you are using a particular tool, you understand that, okay, what kind of feature functionality is there. Now how to provide those feature functionality in a cost effective way is very much possible, because R&D part is gone. These large giants spend a lot in R&D and then do a part in product development. For us, we already have done the R&D, because working with them we have understood what is required. Working with customers, we have understood what is required. And the customers have also been demanding, because every time they don't want to buy Range Rover, rather they would like to go for a solution. So that's our moat, wherein we have very strong expertise. We are already building couple of IPs in this domain, and we have already created a significant presence. See, our presence is we have all this direct contract with customers. So these customers are going to be our customer for next 3 to 5 years. So we can do a lot of cross selling and upselling. We can create a product, can go to them. We can create a consulting practice. We can create something very unique. We can create an AI enabled some offering which can help them reduce cost and acquire customer. So all that is a possibility. In fact, we were having office in IIT Chennai, IIT Madras Research Park, wherein we were developing this IP, and we saw a lot of startups also being there. And there's a possibility, as I talked about inorganic growth, which I will not like to disclose on this platform, but there's a possibility of partnering and acquiring some of those startups, or at least having a knowledge transfer, which we can take it to our existing customer. So existing customer base, long-term contract, sustenance, customer retention, all this gives us a strength. So that's our strength.
Thank you, sir. With expansion plan international, do we see a spike in cost for the coming years and EBITDA margins tighten in comparison of our guidance on top line and the margins?
See, understand, the expense is definitely going to increase, but not to that extent, because some of the initiatives which we are or have been doing regularly. If you follow our LinkedIn page, you may see that there is a lot of international business development going on with software tools. That's point number one. Yes, with manpower hiring, there is going to be some expense, but we have a cycle, we have a timeline through which we expect that the break even should happen, and that should not take more than a couple of months. That we are pretty sure. Now the partnerships are already ready. Partnership, that's something which the partnership which we are doing, they have a major base in US, so we don't have to start from scratch. The customers also, we don't have to start from scratch, because if I talk about these BPOs, 30% of them have a US presence, and when we go and meet those, but they have a different line of business, but I'm already registered in their system. I don't need to get a registration is the very important thing with purchase, etc., etc. So if I go and pitch myself that I'm in US and I can serve you better, and I'm already serving you in India for these things, for this line of business, which are different unit of yours, they will definitely open doors for me. So yes, expense is going to be there, but we are pretty confident that we will recover the expense in a couple of months. It could be profitable as well.
Thank you. Sir, on international front, which company are we going to target the most?
So we are going to target primarily the BPO IT outsource industry. That's the most focused division for us, and the second one could be BFSI.
Great, sir. Sir, at last, would you like to explain the company in simple two-liner sentence?
So, okay, so I explained this earlier, but I will again repeat it. So, we are a company like McKinsey at the front, TCS at the back end. Let me explain this again. We are a consulting-led organization which partner with global companies like TCS partner with and provided their own services. So, we have a mix of both. We have global companies as a product partner. 50%, 60% of revenue comes riding along with them, but then 20-30% of is our services revenue, which is primarily consulting led, and then our IP, which is currently 1%, but that is expected to grow. So in future, our idea is again to ride along with these global companies and acquire 500 plus customers, and then go deep with those customers in terms of cross selling and upselling. That's the plan, and sell more and more our consulting and our IP.
Thank you, sir. Uh, Thank you, and that brings today's session to a close. A big thank you to the Exato team for their valuable insights and to all of you for your time and active participation. On behalf of Exato Technologies, GYR advisors, and Equibridgex advisors, we sincerely appreciate you joining us today. We hope this session offered you a clear perspective on the company's growth strategy and upcoming IPO. For further queries, please feel free to reach us at info@equibridgex.com. Sir, please go ahead for the closing remarks.
Well, thank you so much, everyone. I know you have given us your precious time, and the questions also asked were very, very good. So I'm really looking forward to this IPO journey, and expectation is to create something out of Bharat, to create a good consulting-led sizable company, innovative company. I'm very much interested how we can build something, because someone could not come at our country and challenge us that we cannot be an innovative company. So we have to do that, and I think collectively that is possible. With this message, I thank you all once again for your time, and it was very nice interacting with you all. Thank you.
Thank you. Thank you. Have a wonderful day.